Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Wednesday, March 22nd, 2023. Before we jump into all the charts, I'd like to ask you to please click like each and every time you watch the daily Apple report. The algorithms help us out a great deal when you click like. It allows others to find us easier when they search for Apple analysis. Also, subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded to the Wicked Stocks channel. That includes the daily Apple and daily Tesla report. And finally, please check out wickedstocks.com, where we offer lots of good daily and weekly analysis in a single subscription package, including the daily Triple Q and daily SPY report. We do 2 individual stock picks every week. Tuesday, we put out one on Eli Lilly. Thursday, I think, will be Etsy. We do weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT. Check us out. If you subscribe and you don't like what you see, within 5 days, send us an email and we will refund your money in full. Let's take a look at the charts. In early January, we came off of the targeted long-term support in the low to mid 120s. On the way up, we closed about a month later, opened and closed a month later above this long-term channel top. I'm going to back up a little bit and just mention that when we tested that low 120s, I mentioned how the 169.57 channel top should be considered in reach by some point in 23, and that turned into 3 to 5 month target following the early February settlement above the channel top that is now well below the market at 139.33. So we are a month and a half, almost 2 months into this buy signal. We've got 3 months to go before reaching 172.13, and we may well reach it sooner than that. On the way up, we are now approaching our next meaningful resistance that begins today at 159.07, long-term descending 2/3 speed line in conjunction with a longer-term 5/8 Fibonacci. I have it as a 3-star level, meaning able to contain weekly buying pressures. It may contain buying well into April trade. We could fall off from here, but I'm holding to the 172.13 overall objective above 139.33, so I want to keep it relatively light in here. Nonetheless, if you see reason yourself to short Apple or liquidate a long position, you don't have a strong argument from me, you could consider buying. Well, there's a number of plays here, but ultimately, perhaps 135, 140 out of the money puts that don't expire for at least a few months. I don't expect to see this. In fact, we would need to break certain meaningful support levels on the way down for that to even become indicated. But that could happen. And so I just say that if you also see reason to be short, I don't see a good reason to play the short side here back into the 130s. It may transpire over the next month or two, who knows? But I'm just sort of putting it out there that this is the next trouble spot. I am, as I've been saying, expecting a settlement above 160.49 as an eventuality. Whether that's today or the next few weeks, I don't know. But if we close above 160.49 today, we're probably 2 to 3 weeks away from reaching 172.13. So if you bought those 170 out of the money calls in February when we settled above it and you still have them, bravo. This would be an area that I think would then be in reach within 2 to 3 weeks where we could top out possibly through the rest of the year. And so that's that. Now let's take a closer look at the day itself. I'm going to show you a few things. I'm kind of going through here. I'm going to look at the upside right now. You've got 159.07, which is that long-term speed line. And if we push through 160.49, which is the long-term 5/8 Fibonacci, then the 162 handle is likely. Initially, I have 162.10, which is a short-term rising channel top, but the more meaningful channel top is 162.81, and I have that as a healthy resistance level for the day, able to contain session strength. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. if we close today above 160.49 without testing 162.81 today, we should then by Friday's close reach this 162.81 channel top. So that is kind of a possible 1 to 3 day swing trade. If we close above 160.49, expect 162.81. Where you could take profits. We may top out here for more than a day. I will say that if we were over the next few days to close above 162.81, that longer term objective in the low 170s, I think, may actually be realized by the end of next week with the way this thing is playing out. And there is the 162.81 rising channel top. And here's the intermediate channel top here. So you can trade all of these levels, but just know the big area that I expect to give the market trouble, at least initially today and possibly for the entire day and quite possibly for the entire week, is 159.07 to 160.49. From here, we could back off to 148.11 over the next week or so. 148.11 is nothing more than a new rising 1/3 speed line. It is based in part on Tuesday's high. So whenever you push to new highs, you reconstruct the speed lines. As you recall, when this was the high back in early February, there was a rising 2/3 speed line that contained the selling pressures over the course of several weeks. You can see it right here. It kind of came right across here. Once we pushed beyond that high, which is just a couple of days ago, you've got to reconstruct your speed lines. 148.11. So this is the idea I would like to present, that holding below this 159.07 to 160.49 region does allow the market to fall back to 148.11 over the next couple of weeks. And this is what I would call the 1 to 3 week swing trade. Holding below 159.07, 160.49, 148.11 in reach. So if you, in this area, were to reach for 150, say, out of the money puts, because this speed line is rising daily, you don't have an argument for me. That is actually the way to play the next week, 2 or 3. We don't have a sell signal per se, but we are testing meaningful resistance in that 159.07 to 160.49 region. And over the next couple of weeks, we can fall back to 148.11. In terms of a sell signal today and actually through the rest of the week, that would come with a settlement below 155.45. So working down from 159.07, 157.50 is not this high. It's a longer term high on the October. Back in October, we can bounce here intraday. If we break 157.50, 155.45, this near term channel bottom in reach, where we can place a daily low, possibly bottom out through tomorrow and rally back into the 159.07 to 160.49 region. You could call this kind of a 1 to 3 day swing trade, but just know that if we close below 155.45 and you're short the market, that'll bring a smile to your face, because I think over the following possibly 3 to 5 days, by the end of next week at the latest, 148.11, this new rising 1/3 speed line, able to contain selling at least on a weekly basis, possibly into later April, and we can, off of 148.11, reattack the upper 150s, low 160s again within a couple of weeks of doing so. So once again, closing below 155.45, the 3 to 5 day swing trade shifts negative, expecting 148.11 by the end of next week or sooner. It would only be a settlement. You know, it is a bit stair-step, but, closing below the speed line is a sell signal, yes, but this is really kind of a range here now that I may just call a range. I don't really want to go into the downside right now. First of all, I don't think it's likely that we're going to see a big sell-off. I do think this market wants to run. And closing today above 160.49 should result once again in the low 170s over the next few weeks. But there is, if you want to play the short side, you can. I think that this is the area to actually do it. 159.07 to 160.49, below which we can, over the next few weeks, fall back to 148.11. And if after having tested 159.07 on Tuesday, we close Wednesday below 155.45, we should, by the end of next week, fall to this trend-defining 148.11 speed line, where we can bottom out at least on a weekly basis, possibly through April, and then resume our reapproach to the low 160s. I don't think that there's really anything else that needs to be said beyond what I already have. I'm going to leave you with this image here. I think this is a good one for the day. Oops, there it is. And please click like and subscribe and check out wickedstocks.com. We'll be back tomorrow, Thursday, with another Apple report.